Alright, team. Welcome back to Boss Economics World, the only channel that gives you the P&L on global power plays, not the PR spin from central bankers. You've all seen the headlines flashing across your terminals this week. US pledges all options to save Argentina. Peso soars on Trump Besant lifeline. The talking heads on CNBC are practically gushing, calling it a masterstroke of crisis management. Investors are popping champagne as Argentine bonds, which were trading like distressed junk just last week, suddenly look like the hottest ticket in emerging markets. It's a beautiful story, isn't it? The mighty United States, in an act of benevolent financial stewardship, extends a helping hand to its struggling, crisis-prone partner in the South. A testament to international cooperation. A victory for stability. And if you believe that, I have a sovereign bond with a guaranteed 0% default risk to sell you. From Venezuela. Here at Boss Economics World, we don't just read the ticker, we decode the matrix. And what we're seeing here, ladies and gentlemen, isn't an economic rescue mission. This is a geopolitical acquisition cost, a political insurance premium, and one of the most glaring examples of ideological cronyism masquerading as monetary policy you will ever witness. So, let's cut through the noise. Let's break down what's really happening in the high-stakes tango between Washington and Buenos Aires. From point to surface, let's dissect the anatomy of this so-called stabilization. First, let's set the stage. September 2025. President Javier Milei, the chainsaw-wielding libertarian rockstar, is nearly 2 years into his presidency. His Shotgun a Motosierra plan has certainly made waves. He slashed government spending, took an axe to regulations, and for a moment, it looked like he might just break Argentina's century-long addiction to economic chaos. But Argentina is Argentina. The music always stops. In recent weeks, the market's faith began to crumble. A bribery scandal involving his sister, the Rasputin of his administration, sent shockwaves. Then, a stunning landslide loss in a key provincial election. Suddenly, the narrative of Milei the Invincible was shattered. Investors, who have the institutional memory of an elephant when it comes to Argentine defaults, started asking the dreaded question, is he going to make it to the midterms? Capital flight, Argentina's national sport, kicked into high gear. The peso began its familiar death spiral. To defend the currency, the Banco Central de la República Argentina did what it always does, it started frantically shoveling its precious US dollar reserves into a furnace. Over $1.1 billion torched in just 3 days. Let me put that in perspective for you. At the start of this year, after a massive IMF infusion and some fiscal discipline, Argentina's net liquid reserves were hovering around a fragile $10 billion. Burning $1 billion in 72 hours isn't smoothing a function, as Treasury Secretary Besant so quaintly put it months ago. It's a 5-alarm fire. The country was days, maybe hours, away from a full-blown currency collapse, a forced devaluation, and a return to the hyperinflationary abyss. This was the panic. This was the precipice. And right on cue, swooping in like a financial superhero, comes the US Treasury. So, what exactly is Washington offering? Besant's tweet thread was a masterclass in strategic ambiguity, designed to be just potent enough to stop the bleeding. Currency swap lines, direct currency repurchases, and US dollar-denominated debt from the Treasury's Exchange Stabilization Fund. Let's translate this from FedSpeak into English. Currency swap lines, this is basically a rich friend giving you a credit card with a massive limit, denominated in their currency. The Fed and the BCRA agree to swap currencies. Argentina gets a pile of dollars to defend the peso, and in return, the Fed holds a pile of pesos. It's a temporary liquidity backstop. The very existence of this line is meant to scare off speculators. Direct currency repurchases, this is more direct. The US Treasury literally buys pesos on the open market, propping up its value. A forceful, visible intervention. The Exchange Stabilization Fund, the ESF. This is the Treasury Secretary's legendary slush fund. A pool of money, established in 1934, that can be used to stabilize the exchange rates without needing congressional approval. It's the financial equivalent of a CIA black op. It was famously used by Bill Clinton in 1995 to bail out Mexico during the tequila crisis. Now, on the surface, this sounds great. The bleeding stops. The peso strengthens 4% in a day. Argentine stocks soar. The panic subsides. But look one layer deeper. What is the cost of this stability? While the US was preparing its dollar bazooka, what was the Milei government doing? It announced a temporary halt on agricultural export tariffs. Let this sink in. To convince farmers to sell their dollars and prop up the peso, the government just voluntarily vaporized one of its most critical revenue streams. These levies have generated $4.1 billion in tax revenue this year alone. In a country struggling to close a cavernous fiscal deficit, the very root cause of its chronic inflation, this is like a patient with pneumonia deciding to go for a swim in an icy lake. This is the fundamental, tragicomic absurdity of the Argentine economic cycle. The government is gutting its long-term fiscal health for a short-term currency fix. It's a dose of economic methadone. It stops the immediate withdrawal symptoms, but it does absolutely nothing to cure the underlying addiction to fiscal irresponsibility and external validation. The IMF, by the way, which just signed off on a $20 billion program predicated on, you guessed it, fiscal consolidation, is cheering from the sidelines. Managing Director Georgieva called it a sign of strong policies. You cannot make this stuff up. Why would the US endorse and enable such a fundamentally unsound policy? Because this isn't about sound economics. This is about the Argentine midterm elections on October 26. Milei's approval ratings are slipping. The Peronist opposition, left for dead a year ago, is resurgent. His party's lead has been cut in half. His chainsaw reforms are stalling in Congress, with some of his key vetoes being overturned. If Milei's coalition gets wiped out in the midterms, he becomes a lame duck president. His entire pro-market, pro-US reform agenda dies on the vine. A currency collapse just 1 month before this critical vote would be a political death sentence. It would be the ultimate validation for his critics who claim his policies are a reckless gamble. So, the Besson-Trump intervention is perfectly timed. It's not designed to fix Argentina's economy. It's designed to get Javier Milei across the finish line in October. It provides a bridge, as one portfolio manager so aptly put it. A bridge of US taxpayer-backed dollars to carry an ideologically aligned politician over a rough patch of electoral politics. The message from Washington is clear: you are our guy. We will not let you fail before these midterms. We will print stability for you. The rebound in Argentine assets isn't pricing in a sudden improvement in economic fundamentals. It's pricing in the political will of the most powerful government on earth. Investors aren't buying Argentine fiscal discipline, they are buying the Trump administration's political capital. Now, let's zoom out to the 30,000-foot view. This is where the story gets really interesting. This isn't just about Argentina. This is about the new operating doctrine of American foreign policy in the Western Hemisphere. For decades, we had the Washington Consensus. It was an informal playbook for developing nations: fiscal discipline, privatization, trade liberalization. It was impersonal, technocratic, and, in many cases, deeply unpopular. What we are witnessing now is the birth of that Mar-a-Lago Consensus. The Mar-a-Lago Consensus is not about policies, it's about personalities. It's not about institutions, it's about ideological alignment. It's transactional, personal, and ruthlessly geopolitical. You're with us? You get the goodies. Milei carefully cultivated his relationship with Trump. He flew to Mar-a-Lago after his election. He pulled Argentina out of the WHO, a pet project of the Trumpian right. He's tightening immigration laws. In return, he gets a direct line to the US Treasury. Secretary Besson calls Argentina a systemically important US ally and a hub for private investment opportunities. Translation: he's open for business, our kind of business. You're against us? You get the stick. Look at the contrast with Brazil. Under the previous administration of Lula da Silva, Trump imposed steep tariffs. When former leader Jair Bolsonaro, a Trump ally, was sentenced for plotting a coup, what did Besson do? He slapped sanctions on the wife of the presiding judge. This is a level of personal political retribution we rarely see in international diplomacy. It's a warning shot. You're a direct adversary? You get the gunboats. The recent attacks on alleged drug trafficking boats off the coast of Venezuela are a clear message to Nicolas Maduro. This is hard power projection, designed to show who the boss of the hemisphere is. This bailout is the financial arm of the Mar-a-Lago Consensus. It's about building a bloc of like-minded governments in Latin America. It's a reward for loyalty. The historical precedent everyone cites is the 1995 Mexico bailout. But that comparison is flawed. Clinton's intervention was a defensive move to prevent economic contagion from spreading across the border and to save NAFTA, a bipartisan institutional project. This is different. This is an offensive move to prop up an ideological ally. It's less about preventing contagion and more about projecting influence. It signals to every other leader in Latin America: align with us, and you'll have access to the ultimate financial backstop. Defy us, and you'll face the consequences. So, where do we go from here? In the short term, this move will likely work. The sheer firepower of the US Treasury can scare any speculator into submission. Milei will probably get a stability bounce heading into the midterms. Argentine bonds will enjoy a nice rally. But the long-term consequences are deeply worrying. One. Extreme moral hazard: we have just taught the Argentine political class a terrible lesson, that no matter how irresponsibly they manage their fiscal affairs, if they are geopolitically aligned with the US, they will get a bailout. This completely guts any incentive for genuine, painful, long-term structural reform. Why take the political heat for austerity when you can just call your friend in Washington? 2. The fragility of the fix: Argentina's economic problems, a crumbling industrial base, elevated unemployment, and a contracting GDP, are not solved by this. Printing dollars doesn't fix a broken economy. This intervention is a painkiller, not a cure. The moment US political attention wanes, or if Milei fails to deliver politically even with this help, the underlying rot will be re-exposed, and the crisis will return with a vengeance. 3. The risk to the US taxpayer. While the ESF doesn't require congressional approval, it's still American capital at risk. A loan to a country with Argentina's track record is, to put it mildly, a speculative grade investment. If this stabilization fails and Argentina defaults down the line, that loss is socialized. This entire episode is a microcosm of our new economic world order. A world where geopolitical alliances and personal relationships can override market fundamentals. A world where a tweet from a Treasury Secretary is more powerful than a year of fiscal data. The market is celebrating today because it loves a bailout. It loves liquidity. But what we are watching is not the foundation of a sustainable recovery. It is the construction of a beautiful, glistening, dollar-denominated bubble, inflated by pure political will. And as we all know here at Boss Economics World, the bigger the bubble, the more spectacular the pop. So, by all means, trade the rally. But don't for a second mistake it for reality. This isn't a new dawn for Argentina. It's a very expensive, very risky, politically motivated life support machine. And someone, eventually, is going to have to pay the bill. Stay sharp, stay cynical. This is Boss Economics World, cutting through the noise.